Running a single-member LLC comes with unique tax advantages that many business owners overlook. Understanding which expenses you can legally write off could save you thousands of dollars each year while keeping you fully compliant with IRS regulations. A single-member LLC starts as a regular limited liability company, but receives special status because it has only one owner. This structure offers an appealing middle ground for entrepreneurs who want more protection than a sole proprietorship provides while maintaining complete control over their business. It works particularly well for rental property owners and home-based businesses. The tax treatment of single-member LLCs is distinctive. The IRS considers them disregarded entities, meaning the business itself doesn't pay separate taxes. Instead, you report business income and expenses on Schedule C of your personal tax return, similar to a sole proprietorship. This classification affects both your liability protection and your tax obligations, including self-employment tax on your earnings. One significant advantage of this structure is the ability to deduct expenses that might not qualify as tax deductible under other circumstances. Many single-member LLC owners who work from home can write off portions of their vehicle costs, mobile phone bills, and internet services as legitimate business expenses. Even costs involving family members can become deductible when they genuinely contribute to business activities like trade shows or exhibitions. The foundation of all business deductions rests on IRS criteria. To qualify as a write-off, an expense must be both ordinary and necessary. An ordinary expense is one that's common and accepted in your particular trade or industry. A necessary expense is one that's helpful and appropriate for your business, though it doesn't need to be absolutely indispensable. This framework guides every deduction decision you make. The home office deduction represents one of the most valuable write-offs for single-member LLC owners. If you use a portion of your home exclusively and regularly for business purposes, you can deduct related expenses including mortgage interest, utilities, repairs, and insurance. You can calculate this deduction using either the simplified method or the regular method, depending on which provides greater benefit. Startup and organizational costs offer another important deduction opportunity. In your first year of operation, you may deduct up to $5,000 in startup expenses, like market research and advertising, plus another $5,000 in organizational expenses such as legal fees and incorporation costs. Any amounts exceeding these limits can be amortized over 15 years. Vehicle expenses frequently generate substantial deductions for business owners. If you use your personal vehicle for business purposes, you can choose between deducting the IRS standard mileage rate or your actual expenses, including gas, insurance, maintenance, and repairs. Whichever method you choose, maintaining a detailed mileage log is absolutely critical for substantiating your deduction during an audit. Office supplies and equipment purchases are typically deductible in the year you buy them. This category includes items like pens, paper, software subscriptions, laptops, and printers. For larger equipment purchases, you may need to capitalize the cost and depreciate it over time, though Section 179 expensing rules may allow immediate deduction of up to $100,000 in qualifying property each year. Business travel expenses offer significant deduction potential when properly documented. You can write off airfare, lodging, taxis, rental cars, and other transportation costs for business trips. Meal expenses during business travel are generally 50% deductible. The key is maintaining thorough records that demonstrate the business purpose of each trip. Professional services represent fully deductible expenses. Legal fees, accounting services, consulting costs, and payments to freelancers or contractors all qualify as legitimate business expenses. Remember that if you pay a contractor more than $600 annually, you'll need to report it using Form 1099 NEC. Education and training costs can be deducted when they maintain or improve skills related to your current business. This includes courses, seminars, books, professional certifications, and industry conferences. However, education that qualifies you for a new trade or business generally doesn't qualify for deduction. Business insurance premiums are considered valid write-offs. This encompasses general liability insurance, professional liability coverage, commercial auto insurance, and cyber insurance. These policies protect your business while reducing your taxable income. Phone and internet expenses become partially deductible when you use these services for business purposes. You'll need to calculate the business use percentage and apply it to your total costs. Keeping a separate business phone line simplifies this calculation and strengthens your documentation. Understanding the distinction between capital expenses and operational expenses is crucial for maximizing your deductions. Capital expenses involve significant purchases that provide long-term value, such as real estate, machinery, or major software systems. These are generally capitalized and depreciated over their useful life, rather than fully deducted immediately. Operational expenses cover the day-to-day costs of running your business, like utilities, rent, subscriptions, advertising, and payroll. These are typically deductible in the same year you incur them. Misclassifying expenses can trigger IRS scrutiny or cause you to miss valuable tax savings. Generally, long-term assets costing more than $2,500 should be capitalized and depreciated unless you qualify for Section 179 expensing, which allows immediate deduction of qualifying property. Proper record-keeping forms the backbone of legitimate tax deductions. The CRS requires substantiation for all claimed expenses, and inadequate documentation is one of the most common reasons deductions get disallowed during audits. Every receipt, invoice, mileage log, and bank statement serves as evidence supporting your business expenses. Implementing best practices for tracking expenses will protect you and maximize your deductions. Use separate bank accounts for business and personal finances to clearly identify deductible expenses. Leverage accounting software like QuickBooks or FreshBooks to track expenses, categorize them properly, and generate financial reports. Use mileage tracking apps or maintain manual logs to validate vehicle deductions. Save all receipts, whether digital or paper, to prove the business intent behind each expense. Schedule regular bookkeeping reviews on a monthly or quarterly basis. These reviews prevent year-end surprises, ensure ongoing compliance, and help you identify deduction opportunities throughout the year, rather than scrambling at tax time. Familiarize yourself with IRS Publication 535, which outlines the comprehensive rules for business deductions and serves as an authoritative reference. Working with a qualified tax professional can help you navigate the complexities of LLC taxation while ensuring you claim every legitimate deduction available. A tax advisor or attorney who specializes in small business taxation can tailor strategies to your specific industry, help you avoid costly errors, and provide peace of mind that you're both maximizing savings and maintaining full compliance with tax laws. Single-member LLCs offer substantial tax advantages through strategic use of legitimate business deductions. By understanding what qualifies as an ordinary and necessary expense, maintaining meticulous records, and distinguishing between capital and operational costs, you can significantly reduce your tax burden while operating your business with confidence and compliance.